The option Greeks, the backbone of the options market. Not entertaining, kinda useful, very sexy. This video will be telling you exactly what each of these Greeks do and if I would rather smash or pass. So let's start with the big four that everybody is always talking about. We have delta, gamma, theta, and vega. So let's start with delta. Delta is your price change per dollar move in the underlying asset. As in, let's say you're trading Apple. Off of a $1 move, if you have a 0.2 delta, you will make 0.2 or $20 per contract. Delta is thick, delta can cook, but that's just about everything that you need to know. Overall, I think the rating here is pretty obvious. Smash. Continuing, we have gamma. Gamma is delta's flat-chested best friend. Gamma is essentially your delta's delta. It is the rate of change per dollar moved into your delta. So using the same example as before, if you have a 0.2 delta and a 0.08 gamma, and your underlying asset moves $1, you would have gained $20 on your contract, as well as your delta would now be 0.28. Gamma has a great personality. Overall, I'm gonna have to do it. Smash. Next up, we have theta. Theta is loud. Theta is gross. Theta only watches Disney movies. Theta is the fat black girl at the party that is always yelling. Theta preaches the gender pay gap. Oh yeah, it's also time decay, as in the closer you get to expiration, the quicker your contracts fall off. Now personally, this isn't my thing, but there are some guys that are into all that, okay? For me, I'm good. But if you're interested in selling contracts and making money off of the theta, then she becomes a little more viable. I'm gonna have to leave this one though as a strong pass. Following that up though, something that's a little bit easier to handle, we have vega. Vega will affect the price of your contracts based on each 1% change in implied volatility. Vega has a bad attitude, but overall I would say she slept on. I'll make this one quick though and just leave it at pass. Following up Vega, we have Rho. Rho is not a big player. In fact, I would argue that Rho is pretty much fucking useless. Rho's not even a girl. But essentially, Rho is measuring price changes in option contracts based on 1% changes in interest rates. If it wasn't already obvious enough, pass. I want to close this off talking about one of my favorite Greeks. This is a second order Greek and the only one that'll be included in this video. Charm. Charm is essentially the theta to your delta, or in other words, delta decay. Charm isn't super important to keep track of, but it's good to know that it exists and there are potential ways that you could use it. I like to think of charm as a goth woman. Extremely underrated. Smash. In closing, the option Greeks are very useful in your day-to-day trading, especially for spread traders. However, they're not the most important thing in the world, and you can make shitty YouTube videos about smashing or passing them. Thank you, goodbye.